M&G Property Fund rakes in £100 million in fees since Brexit vote. Investors in the frozen M&G property portfolio have forked out over £100 million in fees since the EU referendum, during which time the fund has delivered negative returns and been suspended twice. The calculations, courtesy of the Financial Times, have come to light days after the M&G UK Property Fund's second gating in 3.5 years. It was among the wave of property funds that halted trading in the aftermath of the Brexit vote. The FT calculated the fees paid by investors in the M&G fund based on its ongoing charge and assets held. The fund has nearly halved in size since it was first suspended, falling from £4.4 billion in June 2016 to its current £2.5 billion of assets. But the newspaper noted that some of the fees would not have been retained by M&G but used to cover routine services like administration and auditing. It added that investors in the fund paid around £70 million over the period in separate property expenses which spanned day-to-day costs of running buildings and did not go to M&G. M&G declined to comment. Fees discount not good enough. M&G Investments blamed ongoing Brexit-related uncertainty and shifts in the retail sector which it has heavy weightings toward for the unusually high and sustained outflows which triggered the suspension. The asset manager has said it will waive 30% of its annual charge on the fund, which is marketed to retail investors, during the suspension, marking a change from the previous 4-month suspension in 2016 in which no fees were waived. SCM Direct co-founder Alan Miller told the FT the discounted fees during the suspension was a step in the right direction but still insufficient. Why should an investor wanting to sell but unable purely because the manager has unsuccessfully managed the liquidity of the fund, be forced to pay more than a nominal fee during the suspension period? The M&G property portfolio has consistently been in the bottom quartile of funds in the UK direct property sector over 1, 3 and 5 years, according to data from TrustNet. Over the last year the fund has handed investors a loss of 7.8%, far worse than the sector's -0.1%. Tilney Managing Director Jason Hollins disagreed the fund should waive its fees entirely, noting there are costs to manage during the suspension including selling holdings down to shore up liquidity. I think they have done the right thing in proactively stating they will cut their fees during this period, he said. Trust in investment industry shaken post Woodford. Since the M&G property fund suspended, rival UK property funds have attempted to convince investors they have enough cash to meet withdrawal requests. BMO Gam and Janus Henderson have quoted cash levels of 25.3% and 16.7% respectively in their property funds compared with M&G property portfolio's 5% position. But Louis Tambay, fund analyst at Fay Fund Info, for more on this story, visit the news article link.